All right, hello everyone, and welcome to this live intraday strategy session on SB Trade Desk. Michael Boutros here with you guys. Good morning to everyone in the room. Eileen, thanks for the heads up. Great to see you. Petru, saw your trade yesterday on Twitter. Very well done, sir. Good morning. He says they just love selling the dollar at 8 a.m. I saw that happen pretty often. AV loud and clear. Thanks for that. Sandy, great to see you. Steven, cheers to everyone in the room. So there's a lot to talk about today. I want to jump right into the charts. A lot of trades have panned out pretty well, guys. The sterling dollar trade that we were following on the swing side, that's already taken out half. The dollar looks like it's making another run at that key slope support that we've been watching for months and months, which is putting other dollar crosses also in focus. You saw that momentum trigger hold here as we ran right back into the lower median line parallel. So things are kind of panning out right in line with our expectations. Euro yen and the trades that are on the intraday. Euro yen is the lackluster of the three. Euro Oz was a beautiful play. We'll go over that. Aussie yen was a beautiful play into a key resistance that we're checking right now. That's also something we'll cover today. And then we also just want to talk about the dollar CAD, which is continuing on that path as well. So as usual, feel free to throw out any questions, trade setups that you have that you want to discuss, but let's jump right in. Before we do, a quick check of the relative performance so far in the greenback as we head into the U.S. session. You can see the dollar is weaker against all its major counterparts, guys. Biggest loser being Kiwi dollar down Kiwi dollar up rather 1.35% as the dollar is coming off here. Aussie dollar is up 1.13. This is a trade that we've been following as well. Sterling 1% advance on the session. Not much from the yen. Again, lackluster, which is why the euro yen's kind of just been a drifter here. The levels are very clean. It just can't get any momentum. So we'll go over that in a moment. Looking at the economic docket for the day. A lot of noise here, not stuff we'll really pay attention to too much. But you did get retail sales out of Europe, which came in right in line with expectations, slightly stronger on the year-on-year. Heading into the U.S. session, you don't really have much to look forward to here, guys, until 2 o'clock when you get the release of the FOMC minutes. The impact this will have, to be quite frank with you, is inconsequential in my mind. I really don't know what we could see. Here's the thing. We already got the projections. We already got the presser out with Yellen, so most of that's already out in the open. The only thing that would really bring up the minutes as a major player today is if there was increased discussion about not removing that patience language, if there were more members that were saying, hey, this is something that we should probably hold on to, or this is setting the wrong precedent. If there are discussions like that, we could see the dollar even accelerate further as there's dissension among them about having removed that language. That being said, guys, stuff like this, the devil's in the details. It's not a really easy scalp type of environment where it's NFP stronger or weaker, etc. So use some caution heading to the 2 o'clock hour, but do be aware that that release is going to be the biggest event risk for this session. Last but not least, before we jump into the charts, a quick look at the equity board. Looks like equities in Europe are pretty much heavier across the board, not by much. You have the FTSE, which is drifting in and out of positive territory. Remember, the Bank of England interest rate decision is tomorrow morning. Unless there's a change in policy, there's typically not even a statement released, so likely that you won't see too much play out of that. DAX is down 0.35%, FTSE MIB down 0.28%. Your Asian markets were pretty strong in overnight trades. They had the Hang Seng up 3.8, Nikkei up 0.76. By the way, really nice bull flag on the Nikkei here played out. My man David Song on Daily FX called that one really well earlier in the week. So again, that's at fresh highs here at 0.76%. All right, let's jump into the trades. Euro Oz. Here's what the daily looks like, or Euro Yen, yeah, rather. Let's start up from the top. Okay, so the basic trade here was the push off this 131.35, 131.80 barrier. The scalp, it's a slow drifter. We're holding within the confines of this descending pitchfork formation, these median lines. The support that we noted in yesterday's report, we were looking for that push into 129.90. You did get it eventually, and then we saw a topside break here, and we're kind of just drifting in this region. So the pull off, that resistance worked. Again, you don't want to get too greedy. This is kind of the major support that we were looking for. The yen, again, it's not really a major push here. So we're not getting much of that yen strength that we need to push this further or lower. But you can see that we finally came into that 129.90 barrier. It was the exact low that we made here in overnight trade, right ahead of the European Open. And then we saw that topside break. Trigger also gave out as far as that downsloping off the highs. So we're kind of neutral here. Put in some divergence into the lows as well. Could get a rebound back into 130.45 or even 131 at this point. So I'm not really involved in the euro yen. The premise of the opening range break was a move into 129.90, and that's kind of where we're sitting right now. Again, the key support would have been down here. So RSI, as I noted in the report yesterday, kind of acting a little funny here around 40. This is when you want to just take a step back. It was good for what it's worth on those initial triggers, but I'm not really compelled to do anything here. Quarter of daily TR is still giving you about 38 pips, so keep that in mind. I really haven't been going for the full quarter, guys, on the ATRs, just because the market environment is so chop, and the ranges haven't been as clear on all of them. So it's okay to bring that target in a little bit and make sure you're tightening things up a little bit when the market's in sort of this consolidation mode. So again, not in focus, but the premise still remains this is the major key resistance. I'm not really looking to do anything here. If we get a break above 130.45, I'm not really going to play the long. We'll see if we can get a short trigger back up here, but a break below that 129 barrier looks for that 129. It's really 129.30 that we were noting. I added the 618 just as a quick reference, guys. If you get that pullback, this is where you want to start to look for initial support here on euro yen. Again, not the favorite setup. Favorite setup is going to be the euro Oz we'll talk about in just a moment. Any questions on this? Here's what the triggers look like, by the way. I just want to go over this, try to go over these as much as possible. I've gotten some great feedback with you guys about really liking the triggers. So on the 5-minute, when we're looking to take these positions, again, there have been some clear-cut triggers. The initial clear-cut trigger was that 4.7 high right around here, okay, at 10 o'clock yesterday. A trade like this, guys, where the risk to reward is just greatly in your favor, 130.80, you're looking at 130.10. So again, 30 pip stop, you're looking for 38 pip limit. You're trading against the session high. This was the European session high. A trade like that, when the risk to reward is just in your favor, is always going to be beneficial. And on the trigger for the 5-minute, there was like a 5-touch trigger here that would have been a very compelling break. Okay, so that would have been a beautiful trigger on the way down. You had a trigger here that would have taken you out of the shorts, i.e. possibly put a long exposure on if you're trading a little bit more in the intraday. Again, the ranges haven't produced all that much momentum, so I'm not really crazy about it. But the opportunity is there, guys. Just trying to review the triggers with you on that. Also note that in every rally we've seen since that high, okay, momentum has failed right at 60, except last night to London with this break to the upside. And again, that break is what invalidated this median line. So keep those things in mind. This is the classic tell that we don't want to be on the short side anymore. You got a top side trigger and momentum, and we cleared an opening, and we cleared the pitchfork resistance. So keep that in mind. Euro Oz was a little bit more of a much beautiful play here. Obviously, the RBA inspired break was the major play here. Remember 143.50 the day before. If you check that chart out, whoops, right here. 134.50 was the opening range low for the week initially, and it lined up perfectly with channel support. So on the break of the RBA, we went over this trade yesterday. I don't want to review it again. The initial targets that downside were 41.76 and 41.75, this key region, which is what we ran into and acted as resistance in overnight trade. So here's where we were when we posted that report last night. Looking for short triggers below 143, which is, again, just that same median line, all right? This region here. This is the bearish invalidation level. You didn't even get an attempted break above this. And in fact, the short trigger that we had right here, I don't know if you can see through the shaded region, guys, just off the lows that you put in for the U.S. session, right, gave us a beautiful trigger on that break. And that break was a clear break of the Asia opening range low. Here's what the 5-minute looked like. Much cleaner of a position. Okay, so this line you see here in blue is the line I've added. That's the Asia Pac opening range low. Here's the Sydney Open. Here's the Tokyo Open. Okay, and here's momentum failing at 60. So this trigger break right here, which looked like it was moving through, failed right at 60. And on the break back below, you still have no trigger to actually take the short. Right? The trigger to actually take the short was right here. As we broke the opening range low for Asia, a stop against the high. Guys, you're talking about like a 15, 20 pip stop here for a 40 pip ATR. This is the high probability trades that we look for. and you look for a 40 pip downside, initial target 41, take cap off, bring stops to break even. The last target was just met, and that was right here at 140.80. That's where we're sitting right now. So another one that played out really well, there's 140.80. Next target down to 140.40. That's going to complete a 618 extension, and then the 618 retracement of the rally comes in at 139.90. For Euro Oz, I just want to be cautious of the Aussie dollar because we're getting this upstretch, guys. So if you get an exhaustion pullback, this thing could give us a nice little rally. You still want to sell that. We're going to drop our bearish invalidation level now from 143 right to the resistance that we talked about last night at 141.75, 141.65. So as long as you stay below this barrier, again, we'll be looking to sell rallies. We'll be looking for short triggers and momentum. For a break lower, targeting 140.40 and 140 and 139.90. It's about every 40 pips, just as the ATR is dictating. So very, very clean on Euro Oz. Definitely the favorite setup here from the scalp side of things. Steven saying, took a trade on Euro Oz on a 5-minute RSI trigger, 141.58, stopped just above the last swing high at 141.80. Got a nice 38 pips. Thanks for your levels. Steven, awesome job. Awesome job. I appreciate that. But again, you guys are the ones placing the trade. I'm just bringing the market's levels to you. These are not my levels. These are the market's levels. We're just identifying them, guys. So I appreciate that, Steven. Nice job. It's exactly how you want to play it. Really close to the quarterly ATR. Beautiful. Beautiful. And those are the trades that we thrive on. Okay? Remember, I have to tell you guys that we need to keep a 1-to-1 risk to reward. But most of the trades we try to take are better than that. Because if you can get an upswing, a break of opening range, and an upswing right back into it, you tighten up that stop against one of those highs, those are going to be your high probability trades. Another thing is when we're going in a trade that, let me take this. I hope you don't mind, Petro. I'm going to use you as an example. You took that beautiful trade with the break of the RBA right here on the break of the channel in Euro Oz, and you locked in a beautiful 100-some pip trade, right? I think it was 180 if I'm not mistaken or something. On a trade like this, guys, when the momentum is just breaking into the oversold condition, these are the ones I'm most, what's the word, prone to fade out. Okay, I don't want to necessarily take the whole trade off. Why? Because the break below 30 is actually when the market has the most acceleration. That means there's so much selling pressure behind it that the oscillator has been shoved into that sub 30 level. So that's not when I want to start jumping out of the position. That's when I want to start cleaning up, right? So this is a trade where, you know, on that initial stretch into 141.75, 100% Petro definitely would have done something. Take a quarter off the trade, take a half off the trade. You're conservative, take a third off the trade, whatever you want to do, okay? But put something in your pocket. Bring your stops on this move. I would have brought it right down to the invalidation level at 143. That locks in some profit. Next downside target for me would have been right ahead of this median line structure, which we've been following for some time, right? That move right there, maybe I would have missed entry on. It doesn't matter. The stop would have been against that last swing high. So even on this upswing, I don't care. You would have eventually gotten triggered at that median line level, right? Another third off the trade. Stops get brought down to the last opening range high. And the last target noted there was 140.80. So Petra says, now I feel bad for not scaling. Kidding. Yeah, of course, man. We can never feel bad. No one ever went broke booking profits, right? And trading is not an endeavor where you can regret stuff like this, right? There's always going to be more opportunities. You're going to see this setup, Petra, 1,000 more times in your career. So, you know, we'll get the opportunities to play it for sure. But just a quick note there, because that was a beautiful trade you took yesterday. I just want to use that as an example. These are the ones that you want to scale out, and especially when you have a wider ATR like that, as soon as you can bring your stops to break even on a 40 pip scalp is where you really want to live in that zone. Okay, you want to navigate that core position. So at this point, you are putting in some divergence on 3 reference points here: lower low, lower low, lower low, higher low, higher low. Of course, we always note that these divergences in the sub 30 or above 70 territory are going to be your weakest signals. You don't want to put too much emphasis on them. Nonetheless, you know, if you have short exposure, you want to be cleaning it up. The primary key support for Euro Oz is still down here, guys, at 139.90, and we noted that in the piece yesterday. That's going to be the lower median line parallel that caught all those lows a couple weeks back on the FOMC, and that's also going to complete a basic 618 retracement of the advance. So real clean levels here on Euro Oz. moving into the U.S. session. Any questions on this trade? Pierre, I'm sorry, I'm not going to be able to pronounce your name. Could I call you Pierre? Does that work? Pierangelo. I hope I'm announcing that correctly. Welcome to the room. Great to see you here. It says, good morning, Mr. Boutros. When you talk about the invalidation level, you mean the stop loss level, I think? Good question. So when I'm talking about, he says eventually a trigger point, when I'm talking about an invalidation level, it's what will, I don't want to use the same word in the definition, but it's what will invalidate our bias. So if I say that 143 is the bearish invalidation level, it means I'm looking for short triggers anywhere underneath this. If the market rallies here and we get a short trigger in momentum, I'll take a short from this level. If the market rallies here and we get a short trigger there, I'll take it from this level. If we rally through this, I'm no longer looking for those short triggers. That means the short side's done. You know, at this point, I'm looking to buy pullbacks. If it's the bullish invalidation level, it means once we reach this threshold, if this breaks, I'm not looking for longs. But as I come into this region, I'm looking for long exposure. Does that make sense? So on yesterday's piece, for example, for Euro-Oz, this hasn't changed. The bearish invalidation level hasn't changed on this one for a while. It was 144.50, and on this one, where was it? 143. Looking for short triggers below 143, okay, and that was the bearish invalidation level. So as long as 143 holds, I'm looking for short triggers. Now, it just so happened that into yesterday's trade session, the resistance at 141.70 that we talked about actually did hold, right? Came right into 141.70 again. That held as resistance, and you got a short trigger right there. So it's below 143, looking for short triggers. Boom. Periangelo, does that make sense? Good question. And if you look at this in the 5-minute, again, you know, that was an objective break as you broke that low, right? And that trigger gave out. That was an objective break of the Asia Pac opening range low. Not the most beautiful trigger, but it doesn't matter because on the rally, and this is something else, on the rally and momentum, you know, as this thing is breaking the opening range low for Tokyo and Sydney, on that rally momentum, the first one found resistance at 60, the second one found resistance at 50. That's all reinforcing the downside. Every time you see momentum turn ahead of 60 and you get a trigger break, or turn ahead of 50 and you get a trigger break, those are the ones that you want to really press because that's resistance hold at 60, confirming that the upside is not in play yet, and a trigger break to the downside is exactly what we look for. So, you know, I hope that offers some clarity. Periangelo says, thanks a lot. I'll write you a mail because I'm Italian and when you talk English too much fast for me, Mr. Boutros. Periangelo, it's a problem of mine. Guys, if I do start rambling pretty quick, just give me a quick heads up. It's a bad habit of mine, but I'll work on that. Periangelo, cheers. Yeah, feel free to write me an email if you want a little bit more of a breakdown. Also, Periangelo, these are archived, so you can come back and watch this you know, as soon as we're done here if you need to review anything that we've talked about. All right, so our favorite setup, Euro-Oz. Where do we go from here, Mike, heading into the U.S. session? That's the question. Here's what the U.S. opening range looks like so far. The opening range for London is right around 140.67. We'll just call it 140.70. The opening range high is 140.90 so far for the U.S. So we're going to see if we make that break. Momentum turned again ahead of 50 here, right? So the next drop zone. I don't know if I'm going to take a break here, guys. If it breaks before the U.S. session range, it's not a trade I'm interested in. Cash markets open at 9:30, 9:45, 10 o'clock. Those are the breaks I look to take. So we'll let the opening range set here. A break lower, you're looking for 140.40. It's pretty tight considering we're looking for 40 pips. So if you're not already in exposure here, you know, you want to wait for a move higher, possibly to test these lows again, or possibly test that median line again before you start to jump anything new. If you are holding short exposure, again, if the opening range breaks to the downside, bring your stop down to the U.S. opening range high and look for that stretch into 140.40. This is the trigger that would take me out of any short exposure intraday and would suggest, again, that you're looking for a near-term recovery higher in Euro-Oz. Eileen says, where is the future trigger now? So Eileen, I don't have any future short triggers per se. This is the top side trigger that would alleviate some of the pressure on the downside. In momentum on the 5-minute, yeah, I don't really like the triggers. I mean, I always like to take the trigger, guys, in the low in price, not necessarily the low in the oscillator. So if you turn it into a line chart, the low in price is this one. Do I have any reference points to take off that? It would be something AWOL like that. So not really something I'm interested in. We could keep this for a reference, just off the lows. Again, they're not my favorite triggers, but sometimes they'll pan out. Possible trigger, Eileen? I'd rather take something like that only if it's accompanied with a break of the opening range low. That might be a nice trigger against the highs. But short side exposure or short triggers at the lows of the week is tough. Okay, you want to let the range set, get a little bit of a recovery, and try to press this again. Remember the daily chart, okay? This is a major key support here at 140.40 to 140.30. Huge, near term. Okay, it's also the close lows that we made for January and the November 2013 low. So again, the daily charts are updated for you every day, guys, right on that page. It's important that you just glance over it and see where you are in the broader trend. These charts are what makes me make the decision if I want to take a trade like this, Eileen. How close am I to a daily major key support barrier? You know why? Because if we were trading the long side, which we were on this rally, and you had gotten a trigger, for example, with a break above like 144.28, right? And you're saying, hey, there's resistance at 144.50. That's a tight 20-25 pip range. Quarter of daily TR is about 50 pips. Something like this, you would have never made it. So again, I get kind of cautious as you come into these levels for new exposure. If I'm holding shorts, unfortunately, I'm not because again, I'm traveling soon. I haven't gotten a chance to take some of those overnight trades. Again, if you're trading in Europe or Asia, you guys are still getting all the cream of the crop of the best scalps, the best entries. Maybe I have to relocate to Asia or something because all my setups are panning out there. But in any event, just keep in mind that key support near term. I would need a pretty compelling trigger. And again, remember that 618 at 139.90. Eileen says, I see, thanks, wait for the range and recovery, if possible. Again, Eileen, I don't want to deter you. If we get a very clean opening range break, like last night's Asia break was perfect, and then you get that momentum on the 5-minute breaking, yeah, if you can tighten up the stop beyond 40 pips for my liking, that's something I could take. But with 40-40 looming as near-term support, I'll be a little more cautious. Petro, I think you asked this in an email or something. I'm not sure if I got to it, but this it's good that you bring it up again. He says, I was thinking about what you said about your preferred time of New York opening ranges, 9:45, 10, and I was wondering if the same train of thought applies to Tokyo opening range, London opening range. I mean, cash markets in London and Tokyo open 1 hour later than the trade session indicator shows us. Yeah, so again, I don't want you to, Petro, stress time. Remember? That's the one thing. Honestly, it's really what price action is doing. I start looking at the opening range here in the U.S. around 1900, like 9, 10 o'clock, looking for a range break somewhere around 11:30, 12. Probably 10:30, 11:30 is the best time, so whatever that translates to. But Petro, it's really the market range that it's setting during that. Doesn't matter if it's an hour block or 2 hour block. Do you know what I mean? You want something to defend a high and a low. If we look at the trade sessions indicator, let me bring it up. Right? Some of them break so late in the session. I mean, this is a couple of hours into Asia right here. All of Sydney, essentially for the first 3 or 4 hours of the session, did nothing. So it's really the range break that we're looking for. Here's yesterday's U.S. opening range. It wasn't a very pretty break. It was kind of a drifter. But that didn't happen until 12 o'clock. 12 o'clock. So it's not so much the time per se. It's just since from the open of that session, look for the range to set a high low and look for a break of that set range. For the U.S., like I said, yeah, typically like 9:30 into 10 o'clock is when you'll see that range having been set in the open market. And yeah, Petro, that'll hold the same. To answer your question straight up, Petro, yeah, that'll hold into The same for Tokyo and the same for London. Futures markets come online. Let that range play. First couple of minutes of the session for cash markets open could be in that hour, could be in that half hour, could be in that 45-minute range. Look for that break. And when that break happens, if you don't catch the initial break, wait for the recovery. You will get it. On all these breaks that you've seen here, you've had an opportunity once it breaks for at least a little bit of a pullback, right? We just don't want to get stuck selling at the lows, which, is never going to be beneficial. Petro, did that completely confuse you or does that help? He says, yes, for me, the time helps for the clarity for the triggers after about an hour and 30 minutes. If it's working for you, keep it going. I mean, that trade yesterday took was great. I just don't want you to stress time, but yeah, it's usually in the first hour, hour and a half of the cash markets that will look for the break, or from the open of the futures markets that will look for the break. So I hope that offers some clarity on that. He says, I got it. Thank you. You're more than welcome, sir. All right. So I think we've covered Euro Oz at length. Any questions on this setup? Sandy says, I love this Euro Oz. I'm a big fan too. So it's been a very nice, compelling play. And as I said in yesterday's piece, guys, we're looking for this trigger to confirm today, not yesterday. If you would have gotten confused, I put a date there. I just kind of wanted to, highlight that. Okay. Next on the list for the intraday page was Aussie yen. So I put a piece out on Daily FX highlighting this setup yesterday. Another look at it last night as I was doing the SB setup. I needed to highlight some more levels for you guys, basically just based on what near-term price action was saying. 92.10 was the opening range close, or the close high that we made on the intraday chart here is a nice resistance range. If you go back, actually a pretty big pivot. But the premise of this trade, again, a very basic and easy break of the weekly opening range. Again, another trade that was fully inspired by the Aussie, RBA rather. Doesn't matter to us, right? We don't care. Doesn't matter if it's the RBA that charged it. It doesn't matter if it's bad weather that charged it. That's all noise. We're focused on price action. We're focused on the trade. So a lot of people, with their intentions of fading all these rallies, you get a lot of people who come on and the first thing they do, Aussie rallied too much on the RBA. We got to fade this move. These guys, those are just bets. They're not based on what the technicals say. And based on this break, it was a pretty major move for the Euro, Aussie yen rather. So here's what the daily looked like yesterday. Again, 91.60 was the objective April and it was the objective April and weekly opening range high. So that move right there invalidated the short side. You saw momentum hold 40 as support on the pullback, suggesting that the broader downside might be at risk here. And you're looking for 92.42. Okay, here's what Aussie yen looks like now in the daily. And there's 42 or 92.42. Okay, so nice little stretch, near-term resistance. Note that we overshot it a little tiny bit, but you got that 50-day moving average right there, so I'm going to be a little bit more cautious. Bottom line, the extension can take us right into the 93 handle, guys, and that'll be a nice 618 near-term confluence with this median line right off the lows. So beautiful levels on most of the Aussie crosses, guys. Sandy says, I have a short in the Euro Oz on 200 SMA on the daily. Let me go back to that real quick. Oh, from the 200. Oh, you're still holding that. Well done, Sandy. Well done. Awesome. So you're bringing your stops in right now, or you should be. I can't tell you exactly what to do, but I would be bringing my stops in. Again, the invalidation near term drops to 140, 170, 140, 160. As long as you stay below this, I'd still be looking for that 140, 40, 140, 30 hold. Sandy says, I did. Well done. Well done. Keep it up. Beautiful trades, guys. All right, so back to the Aussie yen real quick. Sorry about that. So the primary focus, again, is near-term resistance. Here's what the scalp looks like on that. So again, yesterday's post, we're looking for a break of 91.60, 92.10. Clear. Again, another beautiful opening range break, guys. I'm going to show you the 5-minute trigger on this one because this one was the clearest of them all. This panned out with a break of the European opening range high. So again, for you guys trading in Europe, really tight stop was available on this one. You're looking for about 30 pips. The run, and there's 92.45 rather as the high. Okay, right at that target. So at this point, the bullish invalidation level, which was 91.60, okay, that gets raised to 92.10. All right. So if you're holding long exposure, you're getting a break below 70. This should have already taken you out of the trade. This was the initial target. You're looking to buy pullbacks while above this region. You're looking for long triggers. The only issue on this one is the topside break from here. There's really nothing on tap until like 93. So it's going to be a larger trade. We're only looking for 27 pips per scalp. So as you head into 27 pip profit objectives, you are cleaning that scalp up. But we'll see if this median line holds as support, and the broader advance is still in focus. As you zoom out on this one, guys, just to give you some reference on where we are. Remember this thing that we were following for so long? Really nice break. Checked it as support. Moved off. Momentum on the entire decline, holding 60, 60, 60. Got that late break on NFPs here. That took you above 60, and we've been holding 40 more or less as support with multiple 70 breaks, multiple 60 breaks. Pretty healthy. Again, here I'll note that you're getting some divergence, a weak signal, but divergence nonetheless. And that puts the emphasis on this near-term support trigger. Okay? So on a break below this region, a break below this trigger, we're not looking for the long side anymore. We're going to see if we can find some support at that lower parallel. But right now, the main profit objective is out. What is the difference between RSI 1 and RSI 2, says Sam. RSI 2, my man, is actually an add-on indicator. You can get this on fxcodebase.com. Believe it or not, this is actually an indicator that one of the attendees, the regular subscribers for the scalp webinars on Daily FX, he actually created this one. And the only difference, Sam, is that it auto scales it for you, so you don't have to keep resizing. And also, it adds 60-40 for you. So for our strategy, remember, we want to find 40 support in uptrends, 60 resistance in downtrends. And I always had to draw those lines manually, so this one has them right on there for you. That being said, Sam, the actual oscillator is going to look exactly the same. It's just those little tidbits. But I definitely recommend, if you like it, makes things a little easier. Steven says, great indicator, helps see triggers, right? It does make things a little bit clearer. Sam says, awesome. Right on. Love the enthusiasm. All right. So this might be fizzled out here near term. Still love the trade. Watch for a pullback here. Remember, the opening range strategy, guys. Monday, Tuesday, you look for the opening range break of the week. Once that breaks, you look for an extension into a mid-late week high. So anywhere from today into, Friday open, this thing could still make a new high. But typically that's when we start to fade out of that near-term bias, right? So I don't really want to really press the highs until we get through this upper median line. And then again, we'll look for a run right into the 93 handle will be the next scalp. All right. Okay. When you use RSI 20 and when 14? Oh, GS, good question. I get that a lot. I actually answered an email about that like a week ago. So here's the deal, guys. I didn't even notice that I was doing that on too many, but you guys picked it up. What I really do, to be quite frank, is I go back in price action and see whether it's the 14 or 20 that has given me cleaner 60-40 holds and cleaner triggers. Some trades will be a little bit better if you bring it into a 14, just because if they're more sporadic and wider ranges, the 20 will dull that out for you, right? But if you're seeing a price action contract or you're seeing the volatility contract, sometimes I'll bring it into a 14 because that's going to give you the trigger earlier. So GS and guys in the room, my best personal advice to you, I mean, I'll always tell you if you ask here what I think is best, but my best personal advice is go back in price action change it to a 14, change it to 20, and see what fits best. Let's see what the 20 looks like here. Notice how many times you held 60, held 60, held 60, held 40, held 40. Triggers have been pretty clean. Let's see what the 20 looks like. Well, that brought it in a little bit, right? Now that 60 doesn't really look like it hit 60 as often. You only got a couple of 60 tags. Might not be the best one, right? Because you had a lot of chop here. It's a very slow and dedicated decline. So on a trade like this, the 14 is going to serve you a little bit better. You know what I mean? Just remember, when you widen out the period, guys, it takes a little bit more of price action to break, right, to give you the signal. And so for me, when we're talking about, an intraday strategy like that, and when we're talking about a market that's really much more range-bound and chop-like, I'll bring it into a 14 so I can get that break a little bit earlier. GS, does that make sense? It says art. It's an art, not a science, smiley face, right? It is at the end of the day. I don't like to use that line. It's too cliche, but it's so true. Perry Angelo says, Mr. Boutros, can I contact you on this email, mboutros@dailyeffects.com, to write more detail to ask about invalidation levels? Thank you. You're going to want to send it to the SB email. You can send me an email at mboutros@sbtradedesk.com. Or you guys can all email info@sbtradedesk.com too. And that will be forwarded to me. The intern, whoever I was answering those emails, will bring it to me right off the bat. It's probably best if you do that, guys. My personal email does get backed up pretty bad, but you can email either of those guys to if there's something that you need special attention for. Perry Angelo, again, welcome to the room. I'll try to slow things down for you. Feel free to stop me if I am going too fast. All right, so those are the 3 scalp setups that I'm focused on. Again, it's been a light week. It's the start of the month. We had thin trading after a holiday trade. Things are just getting into the swing of things. So, expect that we'll get more. As a quick disclaimer for everyone in the room, quick housekeeping, I will be flying out tomorrow morning. I won't be back until Wednesday of next week. So after today, scalp webinars will resume on Wednesday, and that will be April 15th is when we'll have our next scalp webinar. Also, the intraday updates will be kind of sparse, guys. I don't know what the schedule is going to look like for the wedding down there, but I will try to get you as many updates as I can. On the swing side of things, no change. Jamie is going to be here with you guys running the show. So I do want to jump into some dollar crosses, but before I do, a quick update on what the gold trade is doing. The pullback was materializing yesterday right off of that major key resistance, 1223 to 1225. Again, the cleanest of the commodity block by far. So the risk is still for a pull deeper into 1200, but the trade is constructive above 1196, 1195, and we are looking for long triggers while above this region. Now, this is only going to be exacerbated to the upside even more so if the dollar breaks support. And if we close below this region today and finally clear that support range on the dollar index, that's going to be, probably a nice little push for the gold trade as well. If you can see, the support range has caught so many dips, guys. Every major correction since that October low has been caught right there. Even the break that we looked like we saw last week on the wicks on a closed basis, this thing's been rock solid. So we're going to need to see this close below here today to get the validation for a near-term turnaround. Such a scenario, you're basically looking for a run into 11,880. None of the levels have changed here for the dollar index. So for the gold trade, on the lookout, again, for long triggers while above this region here. Could get a little bit more of a snapback before we start to push the long, but also take a look at this trigger. If that closes today below that, expect that drop until 1196, 1198. Hey, Eileen, I appreciate that. I will see you next Wednesday. Have a great weekend. All right, so into the dollar cross as we go. Dollar CAD is something I do want to talk about because it is on the move. It was a trade that we highlighted last week on Daily FX. There it is. So, again, this was, pre-NFP. So the basic premise of the trade was the massive reversal we saw off the close highs for the year, which were pretty close to the stretch highs that you made here in early January. Momentum held that resistance trigger. We were looking for the 40 break, and we were looking for a drop into this zone here for dollar CAD. This is right ahead of NFPs, and that basically was just below the 124 handle. So those targets are all done and set. Here's what the scalp looked like on Thursday, I believe this was, or it might have been Wednesday. But in any event, all those scalp targets got taken out. We're looking for the 124 handle on the major press to the downside. Here's what the scalp looks like right now for dollar CAD. So we came right into that target last week. Started off this week with a push higher. It was really messy. I mean, just chop fest. But you did get a final break here today, and here we are at 123.85, which is again the low close for February. Here's what the scalp looks like for dollar CAD. So again, the target's at 124.80. There's that 124 target. That just got taken out here on this last stretch today. So at this point for the dollar CAD, again, you want to be a little cautious of trying to press any shorts. We really need to clear this median line parallel, which has been holding price action from the highs of the year. That's what's going to open up the next downside targets. You're basically looking sub 22 at that, or excuse me, sub 23 at that point. 22.83 would complete a basic 236 of the advance. Now, if you want to take this and just stretch it to the new high, we have validation that chokes up a little bit into the 123 handle, but you get the picture. So for dollar CAD, that's the focus right now, and even on the intraday chart, that same formation is in view right here. And this is where you might find a little bit more significant support for dollar CAD near term. Okay. Also, not only more significant support, guys, this, we can clean this up, by the way. This would also be sort of the fallout zone. So if a break below this happens, you're likely to see this thing accelerate pretty quick. Why? Because we've been in consolidation for so many months. And if this downside breaks, you're likely going to see this thing really plummet pretty quick. So just prep yourself as we get into this 23.90, 23 area for this thing to start getting really iffy. You might get a couple of rebounds, false breaks. You're already getting some major wick action down there, so I fully expect we'll see some sort of pullback higher before it moves lower. But the general premise is watch that major key range there, just ahead of 123. Oh, Lee, good question. Says, good morning, Mr. Michael. Question on gold. In the intraday page, we only have the daily level for gold. Is it enough to use as near-term level, or should we rely on the smaller time frame levels? Yeah, Lee, gold on the intraday page is just a personal interest of mine that I'm always following. I don't really intraday scalp gold any longer. Obviously, if you're trading stateside here, you need to have a futures trading account. You cannot trade CFDs. That is there for you guys who are overseas, who are able and have access to the CFD trading. You can definitely trade that intraday. The levels I map out for you on the intraday page for gold are for reference on the broader biases. These aren't the scalp levels that you want to use, guys. These aren't the scalp levels that you want to use. These are the major key levels that are going to invalidate our broader bias. The same type of analysis we do on the intraday currencies is the same type of analysis you can do on this. We can do it together. Let's take a look. So here's the gold daily. I can easily just push this into a 30-minute chart, give it some structure. All the key levels are mapped out from the daily. Just zoom it in, zoom it out so I can snap all these levels. Or not, at some point. I'm sure they'll load at some point, but we can do the same type of analysis, yeah. So you have the triggers on the momentum, which can be taken just as much. There's a trigger right there that gave out with a break below. This was a break below the European and Asia opening range. So that's a trigger right there, stop against the highs. You're looking for a downside move. Remember, this was the key resistance level. This is where we said long side is at risk, right? So you're already looking for short triggers as you head into this. You had some radical divergence all along the highs. And at this point, you're seeing momentum start to hold 40, start to hold 40, start to hold 40, start to hold 40. So, I wouldn't really be doing anything here. I'd be looking for long exposure as you get next to this 1200, or I'd be looking for that break above 1225, or opening range break to the upside that takes me above 60 in momentum, and I'd start looking back at 1225, 1223. So I don't really like it here. You're right in the middle of the range. And in fact, if you take the opening range for the week, which starts right here, it looks like this could actually be an initial opening range break for the week right here. So you'd look for a stretch into Wednesday, Thursday, a Thursday, Friday low. Either way, I don't really have a position for it from this region. You're right in the middle of the range that we're looking at in the daily chart, right? So you want to be close to an extreme when you enter the position. But yeah, hope that makes sense. Sandy says, gold seemed to seek for another low. Your level is around the weekly S1 monthly pivot for gold. I think it will drop into there. Again, I think it needs to reset a little bit too, Sandy. It's had a pretty crazy stretch here, and that was a big level at 1225, 1223. So the trigger just gave out in the momentum. Again, we want to see this close below that today, but if it does, I fully expect you'll see that drop too, Sandy. Again, we're right in the middle of this range, so these are the levels of which I'd start getting interested in gold again. Does that make sense? Sandy says we are around. Yes, we are at the weekly R1 around it. Awesome. So it's basically offering some support here, right? We will see. We will see. And with the dollar doing what it's doing, I'm willing to sit this out here on gold and see if we can get that break in the dollar to give us, if we can get us that break. Lee says, thanks a lot. Really helpful. Cheers. And Lee, by the way, we got you all fixed up on SB Squawk there yesterday. Sorry about the confusion. Okay, Petro wants to take a look at, can we take a look at the sterling dollar too? Still range bound, but maybe if the dollar gives us more meaningful down move. So let's take a look at the pound. Here's pound dollar on the daily. Whoops. Quick way to really upset me is to mess with my trend lines. All right. So we are at near-term resistance now. Now we can add the opening range for the month. Here's the April open. But we are at near-term resistance and the initial opening range high for the month. And that basically extends into 149.80 into 149.50, this 30-pip range right here. It is testing the upper bounds of that range, Petro. I don't know. I don't want to call the break yet, but it's testing the upper bounds of that range. I am looking higher in the pound in general. Keep in mind that the interest rate decision is still on tap. Again, I'm not looking for much, but it's something you definitely want to be mindful of. This is out of play here. Looks like the on-pitch slope right there. So Jamie's trades. Oh, we can just go look at Jamie's charts actually right on the intraday, right on the long-term charts or yesterday's post. I do want to show you what he's looking at. I think he's looking at the same thing I am, but I just want to make sure we're on the same page here. For the sterling near-term structure, I haven't been following it as much because the initial range break on the open broke to the downside. I kind of stopped looking at it from there, to be honest with you, Petro. But obviously, the swing side yesterday presented a position that worked out really well. And here's what Jamie's looking at on the hourly. Really nice Elliott wave pattern, 149.20 into 149.40 is where we were looking for, and that's exactly what we're trading at right now. You see that? Really nice line. So actually, there's a couple of slope lines here that have been working out very well. For me, I still need to see a break of the opening range high for April. We're still testing that right now. And 150.20 is that barrier. It's basically representing a 618 extension off that advance. I don't want to stress this too much, guys, and this is something I just want to say as a note. When you get an event risk, this is FOMC, by the way. So when the FOMC interest rate decision came out, we got all those removal of the extended period and the dollar sold off. Those really emotional spike highs are not going to really typically be the best levels to take fibs off of and to take formations off of, because they're very high emotion, spike type levels where you run stops and the market might run a couple of more or reverse ahead of a major level. Long story short, I don't want to necessarily stress those highs, so I'm not giving too much credence to this 150.15 level. But the opening range high for April, is not too far off from where we are right now. That's what would validate a break of the near-term range, and that would keep us looking on the upside for the British pound. Does that make sense? It's basically this pitchfork right here is what we're looking at. That's not going to provide any guidance. Looks pretty good. I mean, you're testing the upper part of the range, and the momentum signature has definitely changed, right? Or is changing behavior. On this pullback, you did push deep into the 40 region here, but here you are in overbought after holding 30. Again, that's a tell in and of itself. Petro says, thank you. It helps me for trading the sterling crosses. Oh, the sterling cross. I like the crosses more than the dollar, Petro, 100%. I mean, we can take a look at some right now for sure. The sterling CAD, remember that one we were trading for so long? I haven't taken anything on this, but I'm also looking for a reversal or a possible break here. It started to move above this. We've been sitting on that former median line as support. It just hasn't really given us a break of the opening range for the week yet. It looks like a little dribble here, then it recovered. But this is something I'm watching that could give us a really nice pop to the upside, I think. Sterling Oz is also checking a major near-term support at 93.40, 93.20. We sat right into that, into the U.S., into the European Open last night. We set in the European opening range, and we're sitting in that same range. So near term, if you get a long trigger, topside break above 93.90, you look to play a little bit of a recovery, possibly back into 94.60. And on a trade like this, I don't need that 38.2. That's just noise. I'll keep it like this. Those levels I'd be looking at with initial resistance right here. Remember, it's got a really healthy ATR, guys. So I don't really put out trades on Sterling Oz unless it's a real conviction position. So markets were way too thin to call this an opening range break, especially in a pair like this. So you can see that basically this is what you're looking at as the opening range. The only thing I want to say about this is that we did make an outside reversal candle yesterday, so that's actually bearish. So the only reason I'd be looking for a topside pop here, guys, is just because of the divergence that you're seeing in the lows. And if a topside trigger gives, you could have a nice little 50 pip rally here, but it's a bearish trade. I mean, you'd be looking to possibly sell that near term. Just on account of the outside reversal, just on account of the Aussie rally that we're seeing, sterling is just testing the highs. So if that breaks, you likely will see this kind of move lateral. So it's not really in focus as a featured scalp on SB right now, but on the near term, guys, these are the levels I'm looking at. They're pretty clean. Pretty clean. And let me just zoom out and snap these lines for you. By the way, Periangelo, you can definitely take a snapshot. And for anyone new to the room, there's a camera button in the top right-hand corner of your GoToWebinar screen. You can always click on that and take a picture, a snapshot of any of the charts that are presented in any of the webinars on SB, so you can keep them for your own reference. So do keep that in mind. The official trades that we post on the site, guys, are only a part of what you get. We're throwing charts out all day long on the SB Squawk Twitter feed, and some of those are definitely playable levels. We just try to keep you focused on one of the major plays on what's on posted on the page. Sam says it sure does make sense and making some sense too. Cheers. I appreciate that. Adrius says, morning, Michael. Kiwi dollar levels. Thanks and enjoy your trip. Thank you very much, Adrius. I appreciate that. So keep your eye on this. I think it's going to be a beautiful play. A downside break below 93.20. If you do get it, by the way, look for 92.50. I'm sorry, this is 93.20, not 92.20. You look for 93.50. That's a soft target in last week's high, but really you're essentially looking for a drop into like 91.80 in the lower median line parallel. So again, near term, this would also confirm a near-term double top. And it's funny because you can't call a double top until a double top gives out, guys. The trade for a double top from a technical standpoint, if we're going to talk about textbook technicals, is a break of the low. That's what gives you the objective measured move. Until that breaks, it's a range. It's not a double top. So just keep that in mind for Sterling Oz. Another beautiful one. Kiwi dollar coming right up, Adrius. I'm liking it. I'm liking it. I'm liking it as you come into this resistance, possibly looking for this thing to turn over. So momentum hasn't been able to make it above 60. Kiwi's been trading pretty heavy. The rebound or reversal right here was pretty big, guys. I was talking with Christopher Vecchio on this yesterday, and he was asking, what changed, what changed the preference for the Kiwi short after that rally into late March. And basically, on the reversal here, as you came into this median line, first of all, the momentum signature, as it continues to rally and it fizzles before every high, okay, you're holding basically the highs the low stretches that you made for this 2014 decline, right? This line right here is not only that, the 2013 close lows, or excuse me, the 2013 stretch lows, but it's also, as we opened 2015, where we closed at. And that was the exact high and a basic trendline resistance. So right off the bat, as soon as that comes into there, momentum fails at 60, you're starting to look lower. So we don't really know if this is the operative slope that's going to really eventually turn this over again, but you do know is that you head into 76.23, you're looking for the downside. So for the question earlier about the bearish invalidation level, this would be the bearish invalidation level for me. Okay? If this breaks to the upside, no longer looking for the shorts. But as this holds, you look for short exposure, you look for short triggers as you head into this region. Also, excuse me, also from an Elliott wave standpoint, for those people who are calling this a double bottom, this is a perfect and objective failed break of a double bottom formation. So you made a low, you tested a high, you checked that low. A break of this would have put a double top objective of this range to the upside, right? This turned over after a couple of days after holding this major pivot in price. Again, that invalidates the double top scenario. So you're right back on the short side again. So I'm looking a little bit lower below this region. Here's what the intraday scalp looks like. That region is also defined by a major fib confluence. That's 76.10 into 76.20. And that's also now the objective opening range high for the week. Questions on the Kiwi? Petra says, thanks. Your view always adds conviction for my trades. Have fun in Miami. I appreciate that. Sam says, why do you like the crosses? I am new at this, and to me it seems like there's more data analysis out there for the majors. Sam, that's a great question. I'm not actually typically a big fan of the crosses. I go where the market is clearest. So if the crosses have the best technical structures near term, if the crosses are giving us the best ATRs near term, that's where my analysis shifts to. That's where my trading shifts to. At the end of the day, Sam, I don't really care at all, 100% about anything else that I'm hearing out there. And I know what you're saying, there's more data analysis out there, but that's not necessarily a good thing, Sam. A lot of that's noise, man. And that's why you're here at SB, because we try to filter out that noise. I don't care about the headlines. I don't care about all the sensationalist things that you're going to read. It does have its merits. Don't get me wrong. I'm going to scan all the headlines for the newspapers and all the major publications just to see what they're looking at and to see, because sometimes, a lot of times when you see a sentiment extreme in the news headlines, that's your tip that trade's done, right? Once everyone starts saying, oh, the dollar is going to fall off a cliff, this thing is done, short dollar, that's when you know that the dollar pullback is probably getting ready to get finished, right? So, Sam, I don't care that there's more data and analysis there. For me, that's noise. I try to stay focused on the levels, what price action is doing, because at the end of the day, that's what I'm taking my P&L off of. It's price action. It's not what I'm seeing, you know, in a Reuters headline or in some article headline. I hope that offers clarity from where I'm coming from, Sam, and where we're coming from here on SB. We're clearly focused on just the trade. So more data analysis out there, you know, that's just more noise for me to listen to. But to answer your question, it's whatever the technical setup is clearest. So, Sam, I love Aussie dollar is probably the pair I've traded most in my entire career. I've had hundreds, if not thousands, of trades on Aussie dollar. I love the dollar crosses. But when we look at the index and we're testing such a major key critical support like we have here for the last month, pays to put my attention somewhere else that's moving, right? Pays to put my attention in something like Euro Aus, which is coming to a huge resistance and makes a massive turn. It pays to look at something like Aussie Yen, which makes a key outside reversal off of key support, right? This is a trend line, guys, that dates back to 2009. I'm sorry, is it maybe 2008? No, 2009, right? You see this trend line? That's a basic. There's no reason for me to look at a euro dollar trade or something that's super tight when this is a huge downtrend, right, that just made a massive outside reversal, broke through the opening range high for the month off of support. Why not look at it? Why not look at it? So Sam says, got it. Yes, it does, smiley face. I appreciate that, Sam. And always, guys, any questions you have, feel free to throw it out. Safe and Sound is buying the French 40 every morning. Not much to think about, says Sandy. Yeah, you've been trading the equity markets on the CFD side. Just want to show you real quick. We're over on time, guys, but it's my last day for a while, so I just want to drop you some added things I'm looking at. Beautiful trade that David Solomon pointed out, who's heavy on the fundy side, but he called this perfectly. Bull flag. You saw that break early in the week. Here we are pressing to fresh highs, looking for that upper median line parallel to catch this on the Nikkei 225. Very, very clean from a technical structure as far as what we're looking at with this pitchfork. But that's also another trade on the equity side that looks pretty good for a little stretch higher here into 20,000. So an interesting setup there as well. We're going to wrap it up there. Guys, again, thank you for your attendance. I will see you all on Wednesday. We'll keep you updated on the SB Squawk feed. Again, remember at 2 o'clock you do get the release of the FOMC minutes. Take it as it comes, guys. We'll see if there's anything in there that's really going to shift any of the dimensions here, but I really don't see what we could get unless there's increased dissension or unless there's a lot of talk about not dropping that extended period language. So keep that in mind. Best of luck trading. I'll see you guys next week. Chintan, Steven, I appreciate all your comments here. Cheers, guys. I'll see you next week.